Good afternoon, and welcome to the first District 12 virtual conference. I'm Jeff Hagan, your 2020 District 12 Vice President for Florida Realtors. It is my pleasure to introduce the presidents of our member associations. First, I'd like to present the president of the Central Florida Commercial Association of Realtors, Paul Pardica, CCIM. Next, the Orlando Regional Realtor Association President, Reese Stewart. And last but certainly not least, the Osceola Association of Realtors President Joe Johnson. Thank you all for the outstanding job you've done for your members and our association. I'd also like to extend a warm welcome to our president of Florida Realtors, Barry Grooms, and the CEO, Margie Grant. And I'd be remiss to forget Joanna Watkins, our general counsel. Thanks so much for taking the time to virtually attend today's conference. Barry or Margie, if you'd like to say a few words, please do so.
Thank you, Jeff. First, I want to acknowledge you for an amazing job you're doing this year in representing your district and all the presidents as well. This year has certainly presented challenges that none of us could expect, but I can tell you, sitting before you on the phone right now, we have risen to the challenge. Both your association at Florida Realtors has been somewhat in front of some of our issues, but certainly have responded to every issue. One of the things that we did not lose focus of from the very beginning is maintaining our essential business. We have done so successfully, and I want to applaud your members for being responsive, respectful, and cautious during this time. As we go forward, please know that everything that we do at Florida Realtors is based on the success of its members. I look forward to a successful conference for you, Jeff. We are here for you. One thing I am going to plug real quick is our website. Our website has gone from just a little over 200,000 views last year to almost 800,000 views this year, large in part due to the plethora of information on our floridarealtors.org/coronavirus. So that's floridarealtors.org/coronavirus. It is the one-stop shop for everything you're going to need. You're going to start seeing information like how to hold safe open houses, and whatever we need going forward, we're here. We look forward to any requests you may have. And once again, thank you so much for having us, Jeff, and good luck with the conference today.
Thank you, Barry. And Margie, thank you. And I want to tell all the members that are on the call, as the DVP and under Barry's leadership and Margie's leadership, we have had weekly conversations about you, about how to operate safely, and I applaud their leadership in assisting us through this very difficult time. They've been amazing, and we've made some great strides in changing how we operate our businesses. As a reminder, the audience will be able to submit questions as we navigate through this call. If you logged on online, you can enter your questions in the chat box attached to the player. If you're on the phone, you can press the number 3 key, and one of our screeners will take your questions and place it in the queue. For the past several months, we've had to redesign everything in our lives, including the way we practice real estate. With that being said, I do believe we have all come to accept the fact that as we work our way through this pandemic, things will never be the same. So what do the changes look like, and how do we prepare to work in this new environment? To answer that, or help answer that, we've asked the expert, Lawrence Yun, to share his outlook for the economy and for the real estate market. Today, it's my honor and pleasure to present Lawrence Yun, Chief Economist and Senior Vice President of Research for the National Association of Realtors. Lawrence oversees and is responsible for a wide range of research activity for the association, including NAR's existing home sales statistics, the Affordability Index, and the Home Buyer and Seller Profile Report. He regularly provides commentary on real estate market trends for our 1.4 million. Dr. Yun creates NAR's forecasts and participates in many economic forecasting panels, including the Blue Chip Council and the Wall Street Journal Forecasting Survey. He appears regularly on financial news outlets and has testified before Congress. Dr. Yun is a frequent speaker at national real estate conferences and participates in the Industrial Economist discussion group at Harvard University's Joint Center for Housing Studies. Dr. Yun received his undergraduate degree from Purdue University and earned his doctorate from the University of Maryland at College Park. Dr. Yoon, welcome to our District 12 conference.
Thank you, Jeff, for the invitation and for your great leadership in this region. I also want to thank Florida President Barry for also participating in this event. I know it is very difficult times. I had a housing statistics release this morning which shows that nationwide sales were down roughly 20% from 1 year before. The Orlando region was down a little more because of the leisure and hospitality sector getting whacked. But nonetheless, the home prices are hitting all-time high, which is implying that there's a buyers but lack of inventory, lack of listings in the marketplace. So I want to try to see how we will uh, play out in terms of the economy as well as the housing market. The sales being down in April, that is absolutely no surprise. Anytime governors place a lockdown order, it's very difficult to get the transaction done, even with social distancing. And furthermore, some of the buyers and sellers simply do not want to enter the market with the stay in shelter orders. We've been taking survey of the clients, potential clients, and many have indicated they want the economy to reopen before listing or entering the market. So that now that many states, including Florida, is steadily reopening, we expect more listings to begin to pop out, and those listings should not be lingering in the marketplace for a long time. The days on the market is quite swift because even with the tough unemployment situation, 70% of Americans would consider to have a secure employment, and they are facing historically low mortgage rates. Now, if I can go to my PowerPoint, it will be about 20 minutes in length, and then trying to explain a little more details on the data points. If we can go to the next slide. This is the GDP numbers. And you see that 2008, 2009, roughly a decade ago, we had that foreclosure crisis, subprime loan blowing up, and Florida was ground zero for foreclosures as well as the home price collapse. Often I get the question, are we going to have a repeat of that situation? And I say, first, let's look at the facts. And the facts are fundamentally different. Back in '08, '09, or years leading up to it, we had that funny artificial mortgage, subprime lending, people stretching their budget, and also home builders keep producing and producing and producing. So a combination of easy access to mortgage with oversupply situation led to the collapse. Today, we don't have subprime lending, thankfully. People have to meet their income debt ratio standards. And furthermore, people cannot overstretch their budget. So everybody's well within their financial limits, capability. And the home builders have been underproducing, completely opposite picture. So the facts are fundamentally different. So we shouldn't expect the face another foreclosure crisis. And in fact, I don't really foresee that. But the economy will suffer a decline in 2020. This time last year, uh, about 8,000 realtors from across the country attend Washington, D.C. legislative meetings. Uh, I'm sure that many people from Florida had also attended the DC meetings. And we always invite the sitting US president to address the audience if their time permits. President Trump accepted our invitation. And I know that sometimes it can be quite divisive and prone to exaggeration. But one thing that he had correct was on the economy. He said we have the longest running economic expansion. Everything was lining up in terms of record high stock market at that time, along with the record low unemployment rate across all demographic groups. February of this year, Goldman Sachs came out to say U.S. economy is recession proof. Absolutely nothing will derail the U.S. economic momentum. However, as we know, we are in the midst of the pandemic, a lot of economic lockdown, and the 2020 GDP will be negative. And the question is how negative it will be. If we go to the next slide, which shows the first quarter data. So if we can advance to the next slide. The first quarter data shows a decline in GDP of 4.8%. By any historical standards, that would be a large decline. And we see that it has been driven by the both consumer and businesses cutting back on consumption, spending activity. But the next line, residential investment, which comprise home building activity, home sales, at home, was very positive, plus 21%, just to show how strong the housing market had been prior to the pandemic. If we go to the last two lines, what we see is that personal income grew by 2%. So if the income actually grew by 2%, but people spent less, what are people doing? They are saving money. So a typical family, say, may have been saving $200 per month. Now they are saving $500 per month. But why are they saving? And I would guess that they are saving simply because we are in a lockdown. So even if people wanted to go to a restaurant, they cannot. People want to go see baseball game, they cannot. So given that we simply cannot do many of the economic activity, people are saving and saving money. What does this mean as the economy steadily reopens? All this savings could be unleashed into the economy. So there is a huge potential positive. We should also caution, nonetheless, that the people may be saving money, putting the money under the mattress as a rainy day fund, sort of pessimistic outlook about the economy. So that is a possibility. But I am more of the view that people are not spending because of the economic lockdown. And once the economy opens, they are ready to spend. Next slide. The job numbers are very ugly, and the most recent data of April shows a 20 million job losses, particularly in the leisure and hospitality. So hotel industry suffering, certainly Disney World, with a closure, a lot of layoffs in the sector. But the second line is very interesting. 2.5 million job losses in education and healthcare. In fact, doctors were laid off, nurses were laid off. And you scratch your head and say, that is not possible. We are in a healthcare crisis, COVID-19. But in the areas where it was unrelated to COVID-19, say dental offices, or say people needing hip replacement, they had to cut staff because every hospital was focused only on COVID-19. And hence, many healthcare industry that was just like a knee replacement, again, dental care, they laid off people during the lockdown. But as the economy reopens, surely there are people who need dental care. Surely there are people who are waiting for that hip replacement. So all the job losses in education and healthcare should turn immediately positive once the economy reopens. In fact, the Labor Secretary, Eugene Scalia, recently remarked he believed that 80% of the current job losses will regain that job by the end of the year because it's only a temporary furlough situation. Now, certainly, like the cruise ship industry, it may take multiple years unless a vaccine is discovered. But many industries, we expect quick recovery in terms of jobs. Next slide. So job market in the greater Orlando, Kissimmee region before the pandemic was one of the strongest in the country. So from year 2000, you see some steady job growth. Then the foreclosure crisis hit, so there was a job losses. But from that low point to today, that's about 350,000 job creation in Orlando before the pandemic. 350,000 jobs, or roughly about 30 or 40,000 job additions each year, which is the reason why you saw that strong housing demand that was occurring in the greater Orlando market because of the job creation. There was a housing shortage because so many buyers coming into the market. But to show that how strong the Orlando market in terms of the employment situation had been before the pandemic. Next slide. But of course, we hit the wall, and the virus, as well as the shutting down of the economy, and consequently, many people are filing for unemployment relief. And you see the number, which had been very minimal up to mid-March, suddenly climbing, and the peak mid-April of roughly 500,000 people filing for unemployment insurance for the very first time. Since that point, it's been declining, but still the most recent week is indicating about 200,000 new filers of unemployment checks. First, Realtors, I hope you can access the unemployment relief or pandemic relief, because this is a business disruption caused by the government. The economy was running well, but you face a disruption, and one thing NAR did was to advocate relief for independent contractors for the first time ever. So please tap into these resources during this disruption. And once the economy reopens, businesses normalizes, hopefully you are able to get into that income activity. But in the meantime, please tap into the resources that NAR advocated. And of course, Florida Association is very important in advocating to many congressmen who are representing Florida. So all that had helped out in assuring that our members have access to the financial resources. Next slide. The unemployment rate figure is ugly, as we know. A lot of people losing jobs. But this is an interesting job. How much is the unemployment check? So in relation to the wage they were earning, now their lost job, how much worse off are they? And in fact, if you look at the state of Texas, I have to squint my eye to look into it. So hopefully you can see perhaps a little better than I can. In Texas, on average, person who lost jobs now is receiving unemployment check that is about $200 more as being unemployed versus the wage they were earning, say, working as a cashier at a Macy's department store, for example. But in Florida, the unemployment check is not fully replacing the lost income on average. So it's replacing good portion, but not full amount. So in Florida, there's large degree of layoffs, but nonetheless, there is some income replacement, even though it is not a full replacement of those lost income on average. So hopefully, people who are disrupted currently, they can save up that money so that next round when the economy reopens, they can participate in the economic activity. Next slide. I would like to point towards two cities that is outside of Florida, just to give you some sense of what this pandemic may play out. First, the pandemic is so unique event, there is no parallel. But nonetheless, if we can find some similarity, let's turn to two markets. First, New Orleans, Hurricane Katrina. So what happened during the Katrina was that unemployment rate had been 4%. It skyrocketed to 16%. And then it fell to under 4% quickly because of the massive disaster relief fund. So that disaster event quickly dissipated. In New York City, September 11, 2001, that horrific terrorist attacks, unemployment rate before was 4%. Then it went up to 7%, and it lingered at that 7% for a couple of years before coming back down. So what this is indicating is that in flood example, once the flood receded, things began to normalize quickly. New York City, it was more about fear. You go to a restaurant, you don't know whether a bomb will blow up. So there was a degree of fear, so it took a little longer to recover, even with the disaster relief funding. So related to the current pandemic is the following. If a vaccine is discovered, and it will be discovered, whether in 6 months, 1 year, it will be discovered, things will look something like New Orleans. Once the vaccine is discovered, all back to normal quickly. But if the fear lingers, so even as the governor opens the economy, but people do not want to visit restaurants or people do not want to go out to the Disney World, If that is the case, then the unemployment rate may linger for a while. But in the meantime, at least they're getting that enhanced unemployment insurance support during these difficult times. So I hope the vaccine is discovered. We know it will be discovered. It's just a matter of, is it going to be 6 months or 1 year from now? Let's hope for the best. Next slide. Related to the monetary policy, the Federal Reserve is all in, including pursuing something called quantitative easing, which means that they are buying corporate debt, they're buying mortgage backed securities, they're buying government debt, they're buying pretty much everything to provide liquidity. The consequence of all this easy monetary policy is shown in the next slide, which is that we are at a record low in terms of mortgage rates. The blue line shows the mortgage rates, and right now it's about 3.3%. Generally, it follows the orange line, which is the 10-year Treasury borrowing rate. So you see that two curves move in a synchronized fashion. But look at the last data point. 10-year Treasury is under 1%, which means that mortgage rate should be about 2.7%. In other words, I know many of you are saying, wow, mortgage rates 3.3%, I take it. However, it could go down under 3% in 1 month or 2 months if it was to follow this long-term historical pattern. Now, currently, many of the mortgage lenders are saying they don't have staffing to handle all the refinance activity. But perhaps once the refinance activity tapers off, you may begin to see mortgage lenders compete for clients. And way to compete is to lower interest rates. So it's possible that in a month or two, mortgage rate may go down even lower to under 3%. Possibility, not a guarantee, always difficult to time the market perfectly. But this relationship is clearly showing that is possible. But there is a mortgage that is not working, which is the jumbo mortgages, because jumbo mortgages cannot be sold to Fannie and Freddie. Any mortgages that cannot be sold to Fannie and Freddie is facing difficulties, very high down payment, very high credit score. But fortunately, NAR advocacy, and thank you for people who participate in RPAC, which helps our policy position in Washington. We've been advocating that Fannie and Freddie need to assure that there is a government guarantee so that consumers would have the lowest possible mortgage rates given all the factors at play. Next slide. Inventory condition, again, different this time versus back during the Great Recession. You see that during the 2006, 2007, huge numbers of inventory. The labeling is a little bit off. It's not a dollar sign, it's actual units. So those are units. So huge supply of inventory, which was the reason why prices had collapsed. Many markets across Florida, including Orlando, I believe Orlando prices had collapsed about 50% from the peak because of the oversupply. But the prices were running very strong before the pandemic because we were short on inventory. What is it during the pandemic? Well, what do you know? We have even fewer inventory during the pandemic as many sellers are saying, I'm going to postpone the listing until economy reopens. So given that we have shortage of listings, it's hindering home sales. But for those buyers who are in the market facing historically low mortgage rates, sometimes those are multiple bid offering as they are competing with other buyers. So strangely, even as the sales are disrupted temporarily and down, home prices are hitting all-time high because of lack of inventory. I expect May, June, as the economy reopens, listings will pop up. What will happen to those listings? Will it linger in the marketplace for a long time, or will it be grabbed quickly? When I look at the days on the market, it's showing that swift movement. Whatever is being listed, they're finding the buyers within a couple of months, often within a month. So market is very strong. We simply need more listing, more listing, more listing. And also we need more home building, more home building, more home building. But during the pandemic, home building activity collapse, which means that we may have more housing shortage in the second half of the year when the economy reopens. So we need to assure more listing shows up. And one way to do that is for the builders to keep building because building activity also helps the local economy. Hiring of the construction workers, much positive localized economic impact. So one is to do everything possible to bring more home builders to get busy. Next slide. So home sales, I had mentioned, was exceptionally strong. So you see that this shows that at the beginning, run up to the subprime lending bubble, meaning that easy access to mortgages, people bought homes, oversupply, then a crash. But now you see a steady recovery in home sales based on very positive fundamentals, job creation, mortgages being well written, and undersupply of homes. Next slide. And when we ask home buyers and home sellers, do you think prices will collapse like in 2008, 2009? What are you doing with the prices? It's hard to see on this graph all the readings, so let me quickly summarize. The right-hand side, the blue line, home sellers, 90% of the home sellers in essence are saying they will not be reducing prices during pandemic compared to pre-pandemic. Whatever they thought the prices were, they're not going to reduce price or at most only by 5%. On the buyer side, on the left-hand side, 60% of the buyers believe that at most they may be able to get 5% price discount, but mostly they believe that home prices will be stable. So not only economic logic suggesting stable home prices or rising home prices, but the consumers believe in stable prices. Next slide. And the first evidence of the pandemic is that in March, pending contract was reduced by 20%. We are tallying up the figure for April, and I think the Orlando numbers are already in, which is down about 35 or 40%. But I would say April pending contract is the absolute low point because as governors begin to reopen, listings are popping out, and as the listings start popping out, people are grabbing those listings. So April pending contract should be the absolute low point. Now for closings, because there's a delay, 1 month or 2 months, the actual low point for closing activity could be in May or June. But second half of the year would be much better and it will be trending nicely. Next slide. So mortgage purchase application is also a very good indicator. And it's showing that before the pandemic, it was about 10% higher this year in terms of people applying for mortgage to buy a home. Then you see the plunge down 35% in early April. But the recent data is suggesting that it's down only about 5% from 1 year before. So buyers, as the economy is steadily reopening, are eager to get back into the market. Next slide. And home building activity, orange line is the historical average. Oversupply during the 10 years ago, undersupply for 10 straight years. And I thought we were finally beginning to normalize. Then the pandemic hit and the builders went away again. So we may face that housing shortage in the second half of the year. Next slide. How is the government financing all this fiscal stimulus? And to make it short, they're printing money. Or I should say, government is running up the debt. Federal Reserve is buying those debt with printed money. In any country, you print money, you will get high inflation. Common sense would say that. We see it in Venezuela today. They print a lot of money, there's hyperinflation in Venezuela. We saw it in other countries. But in the US, even if we print money, we don't have to have inflation. Why? You have a $20 bill, you go to Mexico, Indonesia, or Finland, or any other country and say, I want to get a haircut. And they will give you a haircut for $20 or even less. They will accept US dollar. That's the power of the US dollar. So because of the global reserve currency status, printing money does not have to lead to inflation. And I don't expect inflation this year, next year, or even the following year in 2022. However, with so much printing of the money, and there will be even more printing of the money next year, with so much printing of the money, one has to say, surely we will have inflation at some point in the future. Some of you may remember the 1970s. Inflation rate was running 10%. Everything was rising at 10%. Food prices, tuition, everything was running up at 10%, including people's wages. But their standard of living was not rising because everything was more expensive. But one thing that will not be rising 5 or 6 years from now is those people who purchase home today and locked in at those low interest rates. So monthly mortgage payment would be absolutely constant throughout the years. And this is something the realtors may want to communicate with their potential clients to say, if there is an inflation, everything will be rising. Rents will be rising. Real estate property prices will be rising. But the monthly mortgage payment is absolutely fixed. So it may provide this one of the rare opportune time to buy now before the inflation occurs. Next slide. So let me go into the final slides in terms of the outlook. Next slide. So 2018, 2019, we had a very respectable year. And I think in Florida, generally you outdo the nation. So you actually had an increase in 2019, even though nationwide we were fairly even. But it was a very respectable year. First quarter was actually better than last year at the annualized pace. But the second quarter would be the absolutely worst. I expect about 30 to 45% decline in sales. I mean, I put 39%. I mean, that number will surely be wrong, but I'm just trying to give you some range of what the possibility. But the second quarter would be the absolute low point. And then third and fourth quarter, there will be some improvement, even though it may be still light compared to 1 year prior. Next slide. So if we look at the annual numbers total, the middle column, 2020, I think the GDP will be down about 4.5%, even with the second half recovery. Overall job situation will be net loss. Again, job creation in the second half, but it cannot fully make up for all the job losses that's happening in the second quarter. Home prices roughly stable. I know that in Orlando, prices are rising about 6, 7, 8% higher compared to the year before. But Florida market always outdo the rest of the country during the growth stage. But the home sales, because we are missing out on the spring buying season, it could be down 10 to 15%. But 2021, just hang in there. 2021, everything lights up positively. Positive job gains, positive home prices, and home sales easily recovering whatever missed sales that occur in 2020. My final slide, just my final commentary, is the following. Next slide. It says some permanent change to expect even after the vaccine is discovered after the pandemic. Indoor open houses, I'm not sure. Maybe we will have open houses again. But people are becoming so comfortable with virtual viewing, maybe people do not make that physical visit. Maybe they do more shopping virtually because they have some comfort level. Also, many offices are holding virtual office meeting and they are saying it is working. It is working fine. And many employers will offer remote work possibilities. Twitter announced they can work at home forever. So we are already beginning to see more companies offering work at home. What does this mean? This means that people do not have to live in New York City. They do not have to live in San Francisco or Atlanta, and maybe they want to go into lower tax states like in Florida where there's a zero state income tax, knowing that they do not have to be physically in office. And also maybe they want a larger size home. Florida has plentiful land. They can offer larger houses at a better bargain. So maybe they want to have a house with a dedicated office space. So in other words, I believe that Florida is well positioned to take advantage of some of the permanent changes that will be occurring after the pandemic. So those are just my thoughts. Thank you for listening, and thank you for inviting to this Florida District 12 event. Thank you.
Appreciate greatly your presentation. I listened to your presentations last week at the NAR event, and again, you always deliver. So thank you so much for taking the time to be with us. I need to correct a misstatement I made earlier. For those that wish to submit questions, it wasn't #3. Please press *3. Please press *3 to submit your questions for Dr. Hune. Also, again, I appreciate it. And Dr. Yoon, just so you know, we had almost 1,800 people that were dialed in to your call. And then to the members who are here with us today, all the information that Dr. Yoon presented will be posted to the Orlando Regional Realtor Association website, as will a recording of the presentation so far. So you can go online and receive that information and download it and use it and share it. And I hope you do. So with that, we'll pause and see if we have some questions. I think we do. Cliff Long, CEO of the Orlando Regional Realtor Association, will present the questions for Dr. Yoon.
Dr. Yoon, thank you very much for being with us today. Again, we have over 1,800 people now listening. This is a huge topic to Floridians. And our first question comes from a member, and he wants to know, how will the commercial real estate market react for the rest of 2020, in your opinion?
So commercial real estate is in a much tougher spot. The retail sector was already weak before the pandemic as people were doing more online shopping. And that trend certainly accelerated during the pandemic as people are utilizing Amazon and other online shopping delivery. So during the lockdown also, all the restaurants essentially had to lock down. So it's a very difficult situation. And I believe that on average, people who are holding a diversified commercial real estate property, the prices will be down about 10% in 2020, simply because the rents are not coming in, high vacancy rate. Now, some offices, will recover. Will recover. Some are even indicating maybe with social distancing, there may be a larger need for offices. My view is that any companies that has offices, I don't think they will want to double the size, knowing that most likely they will provide that remote work possibility to more employees. And hence, it's going to be more difficult and longer recovery time for the commercial real estate. Another thing that is hampering the commercial real estate is that in Congress, it is more difficult to push issues related to commercial real estate. Congress are always willing to listen for the benefit of homeowners, home buyers. Commercial real estate, they consider that to be too business specialized. And of course, we as a realtor understand the importance of business to get the economy going, and getting the economy going helps the consumers. But sometimes it's difficult to pass that message along to Congress. But in the meantime, things like 1031 exchange, we extended the deadline so people who need to conduct those, they are not in the time limited frame during this disruption. Other part is that we've been pushing for opportunity zone. So some of the economically distressed areas, maybe they can get some revival due to the tax benefits of the opportunity zone. And finally, for some entrepreneurs, consider the following. Shopping malls. Shopping malls are in very tough situation and is emptying out. Maybe in the past, it could support 4 shopping malls in a major metro market. Maybe now it can only support 3, which means one will have to shut down or demolish. So rather than getting demolished, consider preparation for the next pandemic. Given that there will be some federal government more spending for infrastructure, maybe some commercial practitioner can talk with the mayor, the city council, or congressman to say, why don't we bring some infrastructure money to redevelop the shopping mall into a healthcare armory? That is to say, a place to make masks, ventilators, maybe extra bed for people who need, just in case there is another pandemic in the future. So having this situation, so the next time we are faced with another pandemic, hopefully not, that we are ready to go and all prepared. So I think that would be a good use of some emptying mall. So rather than demolish it, it's in a strategically a solid location with easy access to many residences.
Okay, thank you very much, Dr. Yoon, for that response. The second question comes from another Florida realtor, and she wants to know, are we going to duplicate the same pattern with regards to recovery as the 2007 recession?
So a 2007 recession, again, fundamentally different. Subprime lending back then, we don't have subprime lending. Overproduction, well, we don't have overproduction. In fact, absolutely opposite. We have a housing shortage, undersupply situation. So the recovery would be more constrained by inventory. That is to say, I believe the buyers, 70% of the workers with secure employment, they are facing low interest rates. And also people who have been laid off, but coming back into the employment, again, like dental offices, they're temporarily laid off, but now they have the jobs back. We lobby so that their credit scores are not hit during this, or their job situation, somehow there's a gap in their job. We want to erase all that as if everything is normal. So I think there will be solid demand, and you also get many people from the Northeast, New England states moving into Florida, and therefore there will be solid demographic new migration trend occurring as well. So demand will be solid. The question becomes whether there is sufficient new housing to accommodate all these new residents. And I think that will be the key. If the housing construction is inadequate, it just means prices will be pushed up too high, too fast, and many people will just remain as being renters for a long period.
Okay, thank you. Now, this next question is one that's important to everyone in Central Florida, and it's, how do you see the market in the Orlando area, considering Disney is our number one employer and everyone is furloughed? What type of rebound do you see in Central Florida?
So vaccine has to be discovered to be fully back. It's not only about air travel, but standing in those lines. I think the social distancing will be very difficult play. But nonetheless, you think about all these families who have planned on going to Orlando this year, this summer, and they had to explain to their kids, sorry, we cannot go, and what disappointment there is. So whether or not they permanently cancel that trip, or is it just a delay into next year, or when it reopens? My guess is that people are simply delaying that trip. So they are just waiting once the vaccine is discovered to get back. So a lot of pent up demand, even though there will be this disruption in the Disney world or other hospitality sector. But when I speak with Orlando realtors, one thing they tell me is that Orlando is not about only Disney or other just tourist activity. There's many technology companies, technology incubators that are coming around towards the east. There was the NASA space shuttle activity, and now because of those talent base, they are creating more companies more closer to Orlando, using that talent skill for other activities, whether it's biomedical engineering, high-tech developments. So Orlando is becoming more diversified, and consider that again, remote work possibility. Well, many technology companies based in California, where they consider expanding possibly into Orlando, knowing that talent base appears to be expanding in the Orlando region.
Thank you very much. The next question is one I'm sure you're getting quite often. Bank cash positions are high right now. So why are banks shy on loans right now? And when do you think that they will be opening back up?
So the bank cash position is high because of the massive stimulus that went into consumers, small business owners. Again, consider the unemployment check, which is very proper given that it is a government-imposed economic lockdown trying to replace most of the lost income. So people are saving a lot of money. They're putting the bank deposit. So bank deposit is high, but the banks are making mortgages Once they can sell it to Fannie and Freddie. For consumers, realtors, often we don't know whether that loan is sold to Fannie and Freddie, but the mortgage lenders know. They know why they are originating those loans. They can sell it to Fannie and Freddie. But the jumbo loans are not working first because they cannot sell it to Fannie and Freddie. And in the past, they would be able to sell it to Wall Street. But Wall Street is unwilling to purchase because they are unsure about the home price outlook. But once they become comfortable that we are in housing shortage, prices are rising, then they may provide more liquidity on the jumbo market. But the other issue is mortgage forbearance. As you know, people facing economic hardship, for realtors, please talk to your past client if in that situation, or if you happen to be in that situation, talk to the mortgage servicer about mortgage forbearance, missing several months of monthly payment. And that is permitted. Many banks are allowing that. Fannie and Freddie back mortgages, they must. But with mortgage forbearance, the money is not coming into the banks in that normal mortgage pot of money. So since that money is not coming in, but yet they have to pay the property tax, they have to pay the investors back the loan, all this part, they're facing a little cash crunch. I mean, the deposits are high, but they are facing cash crunch on that bucket which they work on mortgages, and that's why they are unwilling to lend on loans that cannot be sold to Fannie and Freddie. But I expect that steadily, as people see the home prices rising, that the mortgage availability should loosen up a little better.
Dr. Yoon, this is Jeff, and I have a question. I know NAR has been positioning, and the state of Florida has already was able to do it, but the remote online notary closings, while they're great in a cash transaction, because of the Uniform Lending Code and the requirement for a parent requirement for wet signatures on the loan docs, do you see any way, or is NAR trying to move congressionally to modify the Uniform Lending Code such that we can fully take advantage of remote online notary closings?
Jeff, I appreciate the question because even if we didn't have this pandemic, everything should be moving into advanced technological stage, including electronic signature acceptance all across the board. The pandemic has certainly made the electronic signature much more critical in the world of social distancing. So we've been trying to advocate for electronic signature acceptance across all 50 states. Currently, only 25 are permitting, but we also are hearing, even those 25 states that is permitting electronic signatures, some of the mortgage lenders are still saying no, they will not accept it. So we are hearing this. We need this type of feedback because we want to know where the bottlenecks situation is so we can begin to figure out how to solve it. So only recently we've been hearing from realtors that even with the electronic signature notarization, somehow the lenders are not permitting that, and therefore there's a little choke point. So we're going to try to set up a meeting with Fannie Freddie. Maybe they can pressure the lenders, or talk with we are in communication with American Bankers Association, Mortgage Bankers Association, and ask what the issues are because we should be advancing in technology.
Thank you. And I think we have one more question for you, Dr. Yoon. And again, I appreciate greatly the time you spent with us. I know you're incredibly busy, so we appreciate you. So, Cliff, the last question, please.
Yes, thank you, Dr. Yoon. And this question is with regards to people who, as you know, Florida is the home of the second home. And if you can, please comment on second homes in Florida. If people are unemployed or furloughed, they may not be able to maintain their second home. And a reader wants to, or a listener wants to hear more about that. And also, how do you see? Will there be a lag between folks being reemployed and the influx of spending for leisure and healthcare? We are concerned about our economy with regards to those who come here for leisure, so those who come here for healthcare, and those who come here for second homes. What do you see in that crystal ball of yours for the future of Florida?
Um, so as the economy steadily reopens, let's see how comfortable people become. I showed you the chart on New Orleans, quick recovery. New York, it did recover, but it took a couple of years to fully recover because of the fear factor. Pandemic is more related to the fear factor. So if the vaccine will cure all of that situation, but in the meantime, I think the situation on some of the leisure hospitality as well as second home, I would have been just 1 month ago quite pessimistic about the recovery in jobs along with the second home market 1 month ago. Today, I am less pessimistic for the simple reason that the stock market is just coming back, rolling back. I'm not sure what the investors are saying, but one of the most early indicator about the direction of the economy is the stock market. So after that, rocky stock market collapse 1 month ago, which generally hurts the upper end market, the vacation home purchases, but it just simply rolled back quite quickly, and therefore the demand for vacation home, I think, will be quickly returning. It's just question of that social distancing, the fear part, but and also the remote work possibility. Because one of the trends that we always observe, even before the pandemic, is people buy second home, especially in places like Florida, with intention of making their primary residence once they retire. So you can easily envision someone who is wealthy in their 50s, living in New York. They buy a second home in Florida. They use it as a vacation home or maybe rental property until during their working years. And then once they retire, make it into their permanent home. Well, now with the remote work becoming more widely prevalent, people may say, "Well, I want that second home right now rather than waiting." So, short-term forecast is difficult, but I think the long-term outlook is very good.
Okay, Dr. Yoon, again, thank you so much for your time. We appreciate you greatly, and we appreciate all you do on behalf of realtors across the nation. Thank you again, sir.
Thank you.
Now, I'd like to introduce our Florida Realtor candidates for 2021. Each candidate has been asked to give a brief introduction, and our first candidate is Orlando Regional Realtor Association's own Mike McGraw, who is running unopposed for the office of Vice President of Florida Realtors. Mike, welcome.
Hello, Jeff. How you doing?
Awesome.
Yes, I am running for 2021 Florida Realtors Vice President, and I'd like to start by saying thank you to all my friends in District 12. I look forward to continuing to serve the members of Florida Realtors. We are going to continue working to become better, faster, and stronger in the area of advocacy. This last 10 weeks has been a great example of why advocacy is so important, because when the conversations began about realtors being an essential service, we were already at the table. When it comes to professionalism, we're going to continue to have conversations about how do we raise the bar for professionalism. And I look forward to continuing to help provide outstanding products and services to all of our Florida members. And I look forward to continued support in District 12. Thank you, Jeff.
Thank you, Mike, and good luck. Our next candidate is Gia Arvin. Gia is running unopposed for the office of 2021 Treasurer of Florida Realtors. How are you doing, Gia?
Hey, good afternoon, District 12. I am Gia Arvin. I'm serving as your 2020 Florida Realtor Secretary, and I'm running for 2021 Florida Realtor Treasurer. I'm from Gainesville. Go Gators. I know there's Seminoles out there, but go Gators. I've been working as a realtor for about 17 years. We have a small brokerage that my mother started in 1984. I'm married to my husband, Scott, who's also a realtor, and we have a 5-year-old daughter, Avery. She's been out of school since March 15th. So I know you guys feel me out there with children. I'm sure you feel like your world in general, but especially your professional world, has been turned upside down over the last few months. I know we have. But I'm proud that we've been serving the current leadership team and being proactive and helping realtors navigate these times and help to offer resources and support to keep the realtor profitable, because that's our job. One big piece of the job as treasurer is creating and adhering to the budget. So as the year unfolds, we're unsure how our Realtor membership may or may not be affected because of COVID. We'll need to closely monitor those numbers, assess, evaluate, and adjust our budget as needed. Now more than ever, experience really does matter. So I'm really looking forward to serve as treasurer next year. Professionalism and advocacy are on the top of my list that I'm passionate about as well. We have lots of exciting new ideas going to be rolled out in regards to professionalism and how we're going to change the face of our industry and how we're leading it. Proud of our public policy team and the wins we've had both during session and during the pandemic. So we need to continue to move realtor issues forward and continue to grow our relationships both in Tallahassee and DC. So I'm here to serve you. I hope that you see me as an open door policy. You may reach out to me at any time. I'm a realtor just like you, and I look forward to serving you next year as your treasurer. Thank you.
Thank you, Gia. We also have two candidates who are running for the 2021 secretary position. Both candidates will be given an opportunity to speak, and our first candidate is Stacy Stahl. Stacy?
Thanks, Jeff. I want to say, first of all, good day to the District 12 Florida Realtors. Wish I could be seeing you right now in person, but as we know, this will just have to suffice for the time being. I would love to be your Florida Realtor Secretary for 2021. First, I must say that throughout the country, Florida Realtors is recognized as a leader among realtor organizations. Our leadership team and our Florida Realtor staff truly are forward-thinking and can quickly adapt and act when needed to preserve our members' best interests. As we know, during the pandemic, the communication and information was well delivered and timely, and I'm so proud of and thankful for our team at Florida Realtors. A little bit about me, though. I have had the privilege of serving our profession for the last 16 years. I'm honored to be a member of the Florida Realtor Honor Society and was recognized as the 2018 Realtor of the Year for the Key West Association of Realtors. I have earned the CRS designation, and I'm also C2EX endorsed. Currently, I am serving as an NAR director for my first year, and I am a member of the NAR Leadership Academy this year. As vice chair of the board leadership forums this year for Florida Realtors, I've been actively participating in the weekly caucus calls to maintain direct knowledge of issues facing our association and our members. Last year, I was honored to be named as the DVP liaison to the leadership team for Florida Realtors, which brought into focus this big next step for me of running for office. As a longtime resident of Key West, my husband Carl and I are active in our community, and we are fiercely supportive of our local charities. I'm fortunate in that my daughter Amanda is also a realtor, and she's a partner in my office. She and her husband are parents to my amazing grandson Eddie, spoken like a true Grammy, right? My stepdaughter Amanda, that's two Amandas there, just keep up here. She lives in Texas and is expecting a granddaughter later this year. I'm also really fortunate to enjoy spending time with my semi-retired realtor parents when they are not traveling, which obviously they haven't been doing for a while. I really need to get them out on the road. My ideas to enhance our organization include us expanding our member-centric approach. We want to focus on smaller segments of our membership when needed, because not every issue can be handled as one size fits all. President Barry started this initiative by bringing legislative meetings down to the community level this year. And Florida Realtors understands this approach, and I hope to help lead the charge with becoming more hyper-local where needed to better serve our realtor family. Our advocacy efforts have been very strong, and we do need to continue to have a voice in many of the issues across the state, but especially environmental issues. Whether it's water quality or sea level rise or pollution issues, we need to continue to advocate for the homeowners to keep Florida a highly desirable place to live and work. Of course, affordable housing is intricately tied into our advocacy efforts. As an organization, we need to keep the pressure on our elected officials to continue with fully funding the housing trust funds. And we also need to support local organizations who can actually get affordable housing built. I also firmly believe we need to continue to build our public perception as professionals. As a member of the Professionalism PAG last year, I had the opportunity to explore ideas to offer members additional learning opportunities and to enhance new member experiences. Onboarding with a mentoring component could be just one example of a new idea that would help teach new agents professional interactions with their customers and peers. Because attracting new and younger members and enabling them with tools for success is a win-win for Florida Realtors. On the global scale, Florida Realtors is preparing to start inbound trade missions. I envision these becoming more common over the next few years, showcasing affiliate members, builders, and community organizations as local partners will provide a well-rounded vision of the economic opportunities available in Florida real estate. So whether residential or commercial, we can offer partner countries what they're looking for in their investments. My slogan this year is championing our realtor family. There's pictures on my website and banners, and it's just a small representation of where I've been with all of you. You've all given me so much of yourselves through friendship, mentoring, and fun, and I can't wait to give back to you and be your champion and your Florida Realtor Secretary for 2021. I'm available. My website is out there. It's my name, StaceyStall.com. Please don't hesitate to reach out. Thank you.
Thank you, Stacy. And next, we'll hear from Tim Weishauer, who is a member of District 12. Tim?
Well, thank you, Jeff, and thank you, everyone, for choosing to participate in this today. Obviously, first and foremost, hope everyone is doing well and staying safe. And I know we're all working to adjust to our current social and economic environment. And I just say on behalf of all the Florida Realtors, of course, your physical and financial health are of great importance to us. And for a lot of reasons, that's why I'm running for Secretary of Florida Realtors, is I recognize that we depend upon a state association to come alongside of us to support what it is we endeavor to do every single day as realtors in our communities. Many of you know, in addition to being a realtor for more than 2 decades and working alongside of all of you as a servant leader in our profession at the local, state, national level, I've also had the pleasure of being an elected official and being recognized by my peers in that capacity to serve as president of the statewide Florida School Board Association, which is similar to Florida Realtors, where I've had the honor of leading all school boards in the state of Florida that impacts nearly 3 million students and literally every taxpayer in the state. And I've made a conscious choice not to run for re-election for that, so that I can focus all of my time and all my attention on one thing and one thing only, and that's honestly serving, protecting, and empowering our members, our organization, our local associations, and the work that we do. And I mention that because I want you to understand that at my core, I genuinely believe in what it is that we do and what it is that we support and the principles that we work to uphold every single day as realtors. My entire life, I had chosen that I want to be a realtor. If you ask family, they will tell you as a little kid, I am living out my dream today in being a real estate broker and working in a profession that I hold so dear. I recognize that realtors, we play an essential role in our communities, and I don't just mean essential in the way we've come to understand it in the midst of COVID-19, but we play an essential role in so many aspects of our communities, and I have lived to try to live that out in how I've served my community over many years. I recognize that we need to do everything we can to ensure that our members are professional and productive or prepared, proactive, profitable. You like that alliteration? I just realized all those P's. But nonetheless, that we focus on that to ensure that our members are positioned to be successful. As mentioned, I really do just recognize the value that Florida Realtors plays in our lives as members. I've been a beneficiary of the impact that the association has on me and my business. And I recognize the difference that we make as realtors on the local economy and the difference, as said, that I know we make in our communities. I know we all talk about, we're proud of the fact that we're the largest professional trade association in the state of Florida, and the truth is we should be. I'm very proud of that fact. But inherent in that, it also means, as Gia alluded to in her comments, that we must elect leaders that are ready, willing, and able on day one to lead this organization. and to ensure that Florida Realtors remain strong and viable, but also incredibly relevant for our members and for our profession. We know that, we sit here today with COVID-19 and we find ourselves once again in an economic environment that's challenging. It's going to be challenging for us individually and collectively. And having leaders at the table that understand how to make principled business decisions and that are really able to navigate all the complexities that come with them is of paramount importance. I think about it in terms of the decisions that we have to make truly will make a difference, not just on our members, but think about it. It makes a difference on their professions, their career, their families, their livelihoods, and they're all depending upon us. There's almost 200,000 members all depending upon us to get that right. I served on Florida Realtors Finance Committee for many years, and I've been personally responsible for overseeing budgets in excess of $1 billion. I understand the decisions have to be made when you're overseeing an organization or an institution such as Florida Realtors. Of course, advocacy will be at the core of what we do. It's of paramount importance, and I would submit to you that we must elect leaders that fully understand our issues and that are also more than capable of articulating them, whether that be directly to the governor, the legislature, or in truth, any stakeholder. Many of you know our current president and past presidents have selected me to lead in some of the most important work we do in the area of advocacy, including chairing our legislative think tanks, our Realtor Town Hall, public policy, and now I have the pleasure of serving as chair of the Florida Realtor PAC Trustees right here in District 12. We also know that as we think about how business models and technology and disruptors will continue to evolve, that we have leaders sitting at the table that understand how to navigate all of that and ensure that our members are at the center of the transaction and that their profitability is protected. And I'm prepared to do just that. Many of you know I have vast experience in strategic planning, including serving on the National Association of Realtors Strategic Thinking Committee for a number of years, as well as serving on and chairing Florida Realtors Strategic Thinking Committee. And as Dr. Yoon mentioned, Florida is uniquely positioned where the Sunshine State and the world comes to our doorstep. So we must continue to build upon the work that's already taking place to ensure that our members are positioned to be the true global real estate leaders. I'm proud to say I've been a member of the Canadian Realtor Association. I am an RSPS, a CIPS, and I look forward to building upon the work that we've already been doing in that area. We think about professionalism, and I would say that sadly right now our industry is crying for increased professionalism and enhanced professional development to help move that along. And I'm 100% committed to working with our members across the state to do everything we can to increase professionalism and in truth setting the standard of what real estate professionals really do look like, as well as we've learned here in recent months, adapting our education delivery methods and how it is we reach and engage our members and ensuring that we're elevating the Realtor brand. We think about the brand that NAR put out about that's who we are. We're people that make a difference in our communities we serve in different capacities. We invest in the lives of others. We protect the dream of home ownership. We impact economies in so many ways. And my wife and I have done just that. Our entire adult lives has truly been spent trying to figure out how it is that we can serve others and how we can make a positive difference in their lives. And I would submit to you that that's why I'm running for Secretary of Florida Realtors. I want to do everything I can to ensure that our members are considered, protected, and ensure that our association is there to serve them, not just today, not tomorrow, but for decades to come. Thank you.
Thank you, Tim. And our final candidate is Danny Hernandez, who is running unopposed for District 12 Vice President for 2021. Danny, how are you?
Hi, Jeff. How are you?
Good.
Well, first I want to thank you, Jeff, for your leadership in our district. I definitely have some big shoes to fill. But first and foremost, I believe, if I'm not mistaken, I also want to congratulate you on the first virtual district conference, if I'm not correct. Am I correct, Jeff?
Yes, this is the first district conference for District 12, It is the second district conference. One of the other districts did have one before us, but if the numbers are right, this is the largest district so far that's had a virtual conference. And frankly, just so all the candidates know, one of my concerns was would we retain viewers or listeners during this? And we actually only lost about 4 or 5% of the listeners. So your messages are going out to 1,650, 1,700 listeners. So that's pretty awesome, I think.
Congratulations, Jeff. Job well done. For those of you that don't know me, my name is Danny Hernandez. I served current as a past president of Osceola County Association of Realtors. I also serve as the past chair of the Diversity Committee for NAR. I'm very honored to be in this position. With that being said, Jeff, I really just want to pick up from where you leave off when you're off of the district vice president regarding the ongoing efforts of the Florida Waterway Cleanup Project. And also, I want to continue the efforts on the professionalism in our district. But also, not even more importantly, I don't want to forget about the Sadowski Fund, especially in the times that we live in. So these are the three major bullet points that I want to continue. I believe that, 1 year is really not enough time to complete all the initiatives that we set forward. So I want to pick up from where you left off, and hopefully we can get stuff going further down the road. So I truly thank you for the opportunity to let me express my initiatives, and I'm looking forward for 2021.
Okay, thank you, Danny. So we are prepared to accept questions from the listeners. So if there are any questions, you can hit the *3. We already have a few that came in. Mike, are you still on the call? And if so, this question was directed toward you. And they're asking if you could give any indication of what you think the open house requirements will be as we move through phase 1 and into phase 2.
Each of us are independent contractors, and we're independent businesses as far as the brokerages go. I know Florida Realtors is putting out guidelines, and we're leaning on the CDC and the Florida Surgeon General to help us with those guidelines. And obviously, when it's all said and done, it goes back to professionalism. We need to act in a professional manner, especially when it concerns the public, to keep our customers safe and to keep the public safe.
Okay, thank you, Mike. Great answer. I've got a question that I'm going to throw out to each of the candidates for a very brief response. What is one or two things that you've learned during this time that you think is to actually the benefit of our industry moving forward? So I'll go ahead and start at the top. Mike, if you would comment first, and then I'll work back through the line.
I guess what I've learned right off the bat is how much business we can get done virtually. I think all of us can agree that there was a little fatigue in all the virtual meetings, but at the same time, you can get a lot more done by doing some, not necessarily all, but some of our meetings virtually. A perfect example is the legislative meetings in Washington, D.C. last week, where we had just record numbers of people attending those meetings. So doing some business virtually is a good thing.
Okay, thank you. Gia, would you like to chime in?
Sure. So I love how many people are involved, like on this call, almost 1,800 people. That tells me that people want to get involved, but maybe they don't have the ability to drive to where the meeting is. Maybe they don't have the money to have to spend the night in hotels for the national meetings. I think that we're going to see a shift in the ability to have a virtual membership to a meeting and maybe a live membership. I think that it's been loud and clear that the participation is out there. The members just want it in a way that's more convenient for their lifestyle. So that's number one. And then number two, I love seeing how innovative we've all been in coming together and adapting to change. I mean, I knew realtors are fast, fluid, and flexible. Everyone knows that. but we've really been able to showcase that. And I feel like our communities even feel how well realtors have responded, reacted, and been able to conduct business and still keep things moving forward for the consumer. So very proud of our industry right now.
All right. Thank you, Gia. How about Stacy?
Thank you, Jeff. I actually have two comments on this. First, I think one of the biggest takeaways I have is that, as Gia mentioned, education, it's, so nice to be able to actually go out and go and sit in classes, but it's not always practical. I think it's been a real boon to see the different offerings of all the different educations from the NAR platform right now with the Right Tools Right Now program they're doing and some free classes there, to even some smaller things like WCR having like a 1 hour here, 1 hour there meeting for their members. And I was so impressed with some of their content that we don't have WCR down here in Key West. Unfortunately, we're just a little too small to pull it off. But I actually joined at the state level now because I was so impressed with the offerings that they put out there. So just delivering education to you directly in small little chunks, I think huge step forward in learning the way our members are learning. The other thing I think is really important is we got so hung up talking about disruptors and what they're doing to our industry that I'm really kind of glad to take this glance now and see that maybe we're actually disrupting and we're showing that iBuyers and, the ilk with, only buying online and doing all these touchless transactions with nothing, you actually still do need the realtor, and we are relevant to that transaction. So I think it's a nice combination, and it's a hybrid we should explore more of, blending the realtor position with technology that actually keeps us even more focused and more central for the transaction. Thanks for the question.
All right. Thank you, Stacy. How about you, Tim?
Yeah, so I guess one of the challenges of going last is that, everyone's already made some really good comments, but I want to echo, first of all, the enhanced engagement piece and kind of the versatility that comes in being able to still ensure that we can have our face-to-face interaction, which I know we all really enjoy, but also tying that in now with these virtual conferences. And as Danny said, kudos, Jeff, for pulling this conference together and having so many people involved in it. I think it's an example of how we can exist in these two different universes where maybe I can't go to the live convention or the live events, but I can still participate in a virtual way. And it doesn't have to be one or the other. It kind of becomes a combination of both. Another piece really is an adaptation of that, right? So you think about what's happened in all of our lives and in our business over the last 6-8 weeks is really, it is being nimble, it's adapting and it's innovating and figuring out what are new ways that we can look at, number one, what our business models might look like and how we're going to engage with our customers or our clients, how we're going to interact with our peers, hold meetings, do different things. And I think one of the things that I've been very encouraged by, although it didn't catch me by surprise, is just how nimble and innovative our industry really can be. But I want to touch on 2 points that I don't know that anyone touched specifically, which is I'll use the word collaboration. I was on a board of directors call this morning with an organization, and we were talking about the collaboration that's taken place between two different, somewhat similar and yet in some ways competing organizations, but coming together for the collective good of the overlapping members that they serve, and being able for all of us as an organization or as an industry to figure out how can we collaborate with one another more effectively. And then lastly, I want to touch on this because it's so key to what it is we do as an organization. It really goes back to our advocacy efforts. When the initial threat came on that executive orders were going to be issued across the state regarding staying at home, I'm proud to say Osceola County was the first county to be able to get the specific and exclusive language that real estate be identified as an essential service. And that came from us as realtors being able to position ourselves to say we want to make sure that if anything's going to impact real estate, we know how to respond and adapt. The same thing just happened the other day when you think about conversations that have started to bubble up around rent controls and being able to respond to that. And then lastly, I know I've spent a lot of time over the last number of weeks working to help members that are even on this call when you think about vacation rentals being shut down and how it is that we can pull together our collective resources, our knowledge, and the connections that we have with other elected officials to benefit our members. And here we sit, just yesterday celebrating that in Central Florida now, in Osceola in specific, but in Central Florida, we're going to start to see vacation rentals open up. These, I think, are all manifestations of some of the great things that we did to adapt to challenges as an organization. When I say organization, I mean local, state, and national, to ensure that our members can remain central to what it is that happens in our communities and the life of real estate, but also that ordinances or laws or orders aren't put in place that would inhibit our members from being able to be productive and successful. I'm proud of all of that.
Okay, thank you, Tim. And Danny, do you have anything to add?
No, I want to echo Tim's messages. I think it's vital that we, together, I say a saying when I go speak at different conferences, and what I say is that, unfortunately, the times that we live in brings out the best in people, and I think this is an example of that.
Okay, thank you, Danny. I am curious. I've seen commercial real estate not always in lockstep with residential relative to NAR. Mike, do you have any thoughts of how to increase participation of the commercial licensees in the realtor world to bring them into our fold?
I think one of the things that we're working on right now is a realtor board certification that commercial practitioners can use to market to the consumer. We're working on that with different fields of real estate, but that's a good way to bring some of these members on, to give them access to the tools and products that we can provide them as a commercial practitioner.
Okay, thank you, Mike. And I have one last question, and that regards professionalism. It's been a buzzword forever in our industry, and yet it always seems to be a buzzword because we're not making progress. C2AX was a step, but briefly, and again, I'll start at the bottom this time with Danny. Do you have any specific thoughts of how to improve professionalism in our industry?
Well, one of the things that I wanted to accomplish is getting with the leaders, the different presidents of the associations, and kind of setting a focus group. This is one of the things that I just thought off the top of my head when I decided to jump into this candidacy, and get the feedback out, see where they're lacking and what they see. I really want to get down to the grassroots of what's really going on out there. I personally experience it because I'm a transactional broker as it is. But I wanted to get the feedback from the rest of the presidents here and see what they have and see what we can collaborate as together, and then make a decisive decision of which way to navigate through this.
Okay, thank you, Danny. Tim, you're up.
Sure. So I would think maybe I'll answer it in three parts, right? Number one, I think the simplest thing is that we model the way, right? So each one of us on this call, or each one of us that have been trusted with a position of leadership or responsibility in an organization, we must be the model of what professionalism is. And in doing so, I think it helps bring everybody else along. But beyond that, we have to think outside. So we so often think about our internal customer, which is our members, but we have to remember our external customer. The external customer is every property owner, it's every home buyer, every seller, every renter, every investor, whoever it may be. And I think one of the things we have to really be intentional about, and this is something I worked on at the national level when I was on strategic thinking, and we certainly talked about when I was chairing strat thinking at Florida Realtors, is how do we do a better job of engaging our external customer, the buyers and sellers and owners of the marketplace, to get them to truly understand who it is that we are as realtors and what the distinction of that realtor R really means. And I don't believe that, and this isn't a slight on the National Association, I actually think that That's Who We Are campaign is highly effective and is a very smart play. But historically, we've not done a good job of saying realtors really are the gold standard of professionalism, and you want to look for that seal of distinction. I want to applaud our current leadership team, Mike, Gia, Barry, the whole group, right, for putting together the PAG and working through to say, how do we enhance that? The last thing, though, is also, and we've already started this, and I worked on this as well, Florida Realtors with Public Policy, is working with DBPR and talking around what can we do to continue to raise the standard of what it means to be engaged in our profession. And I want to use the word profession as opposed to industry, because I think that's an important distinction. We want to make sure that this profession is attracting the best of the best. And I don't just mean by way of the work that they do, but by the character that they have and their willingness to truly serve and honor the people that they represent. I think if we bring those pieces together in an effective way, that we can truly make a difference on increasing professionalism. And of course, we have the code and we have all of the mechanisms in place within our organization to police one another, to hold one another accountable, and to call each other to account for the right type of behavior.
All right, thank you, Tim. And I'm going to cut it off a little short, but first I do want to let Stacy answer that particular question on professionalism. Mike and Gia, no disrespect, but we are running a little long. So Stacy, you'll have the last word, and then I'll close this up.
Wow, my husband always says I get the last word in conversations too, so thank you very much. I agree with a lot with what Tim just mentioned. Professionalism does start within our organization, and we have to look to ourselves to self-police. We have been in discussions making it easier to let our members know that it's okay to self-police and actually send through that complaint on someone that is really just not being a professional. So that's one part of it, is making sure our members are aware of the avenues that are available to them. Another thing that's super important is getting and reaching members when they're new. You know, just like teaching a young child how to do something, you're teaching a new agent how to grow and develop into a professional. And a lot of people are coming from previous professional lives. So it's not that you have to teach them how to be a professional per se, but how to be a professional realtor and what that involves, including simple things like lockbox etiquette, returning phone calls, all those little things that kind of make professional agents nuts, like reading the contract, understanding it. So we need to teach that from the beginning. And I did mention earlier, you know, like some type of a mentoring program or concept. About 70% of our realtors are not part of big franchises. They don't necessarily have that person to turn to ask for information. So by putting together a mentoring program that will allow us to help teach and grow our new members into being professionals, we will have more people then leading the way with their behaviors and their actions. It's very difficult because we are a low barrier to entry type of a profession, but we do need to make sure that our members understand what it actually means to put the R on and to be a realtor. And I think that with education and some new programs and thoughts in place, including what Mike McGraw mentioned earlier about the board certification, I think those are excellent ways for us to start to take control of our story. And that was one of the things I used to mention when we were in our meetings for the professionalism PAG, which was we need to be in charge of telling our story. We cannot let the general public continue to have these stories about us as a profession. So those are just a few of my thoughts really quickly on professionalism. I'm happy to discuss further, but I do know we're short on time now. So I thank you for all of your time today.
Thank you, Stacy. And I'd like to thank all of you for attending and participating in our virtual conference. I also want to remind you to register for the Florida Realtors Annual Meeting in August, the Women in Real Estate Conference in September, and then something dear to me is the Waterway Cleanup event in July. We appreciate your participation and continued support of Florida Realtors, and I look forward to seeing you all in the very near future. Good afternoon, and have a great rest of your week.